Listen to me very carefully, because what I'm about to say could be the difference between a comfortable retirement and struggling to survive in your later years. I'm not exaggerating. We need to have a serious conversation right now about something that genuinely scares me when I look at the data, and trust me, I look at data every single day. That's my job. I'm Mr. Wonderful, and when it comes to your money, I don't sugarcoat the truth. Before I reveal the 3 safest exchange-traded funds every retiree should seriously consider owning, I need you to do one thing right now. Subscribe to this channel. Hit that button. Why? Because this channel is about protecting your wealth, generating reliable cash flow, and making sure you never run out of money. If you care about your financial future, you belong here. You is a very exciting day, day carry, and is a bonding. Now, let's talk about what's really happening out there. I meet people every single day, hardworking, responsible people who did everything right. They saved consistently, they funded their retirement accounts, they followed professional advice, and yet they're scared. They're watching their portfolios swing up one day and crash the next, and they can't sleep at night. That's not how retirement is supposed to feel. Here's the brutal truth no one likes to admit. Most retirees are not prepared for a serious market crash. They think they are, but they're not. Their portfolios are loaded with individual stocks, overly aggressive funds, or worse, piles of cash earning nothing while inflation quietly destroys their purchasing power. Every one of those approaches is a disaster waiting to happen. What keeps me up at night isn't my own portfolio. It's thinking about millions of people who are one bad market correction away from being forced back to work at 75 years old. That's tragic, and it's completely avoidable if you have the right strategy. Here's something that might surprise you coming from me. Once you're retired or close to retirement, you cannot afford to be reckless anymore. The rules change. When you're young, you can take risks. You can chase growth. You can recover from mistakes. But in retirement, you don't have decades to wait for the market to bounce back. You need your money to work for you now to pay bills, protect your lifestyle, and give you peace of mind. That's why I obsess over 2 things in retirement: safety and cash flow. Not one or the other, both. You can't hide your money in cash, and you can't blindly chase high yields without understanding the risk. You need a strategy that protects your principal while producing income you can actually live on, and that's exactly what I'm going to show you. The 3 exchange-traded funds I'm about to share are not flashy. They won't double your money overnight. They won't make headlines on social media. But here's what they will do. They'll protect you during market crashes, pay you consistent dividends, and let you sleep at night knowing your retirement is secure. That kind of security is priceless. Now let me explain why ETFs are ideal for retirees. First, diversification. Instead of betting your future on one company, you own hundreds or even thousands of businesses in a single investment. That spreads risk intelligently. Second, liquidity. You can sell ETFs any day the market is open, unlike real estate or private businesses. And third, low fees. I hate fees. Every dollar you lose to fees is a dollar that's not compounding for you. Fees are the silent killer of wealth. But here's where most people mess up. They assume all ETFs are the same. They're not. There are thousands of ETFs out there, and most of them are garbage, too aggressive, too concentrated, too expensive, or designed to enrich the fund company instead of you. That's why I spent months analyzing data to identify the safest options for retirees. I studied how they perform during market crashes. I examined dividend yields and growth. I reviewed expense ratios and underlying holdings. Because when it comes to retirement money, mistakes are expensive. One bad decision can cost you years of financial security. Before I reveal these funds, understand this: the goal in retirement is not to get rich. If you're retired and still trying to get rich, you're playing the wrong game. The real goal is capital preservation and reliable income. That may sound boring, but you know what isn't boring? Financial freedom, knowing you'll never run out of money. Because when the next market crash comes, and it will, most people panic. They see portfolios down 20 or 30% and sell at the worst possible time. That's how wealth gets destroyed. But with the right ETFs, you don't panic. You stay diversified. You keep collecting dividends. You stay in control. I've lived through multiple market crashes. I've seen people lose everything, and I've seen others barely feel the impact because they were prepared. The difference wasn't luck, it was strategy. You don't buy insurance after your house burns down, you buy protection before the crash, not after. So let's talk about the 3 exchange-traded funds I trust with retirement money. I'm going to walk you through each one carefully because the details matter. This isn't about buying something just because it sounds good. You need to know exactly what you own and why you own it. ETF has shown the Dividend Aristocrats Fund. The first ETF on my list is a Dividend Aristocrats Fund. So what does that mean? These are companies that have increased their dividends every single year for at least 25 consecutive years. Think about that. 25 years of higher payouts means they survived recessions, market crashes, financial crises, and still paid shareholders more every year. That's the kind of stability you want in retirement. This fund owns companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble, businesses that sell everyday essentials. No matter what's happening in the economy, people still buy toothpaste, household products, and healthcare. These are defensive businesses with incredible track records. Here's why this fund works so well for retirees. A reliable dividend yield, typically around 2.5% to 3%. Dividends that grow over time, helping you fight inflation. Strong downside protection during market crashes. During the financial crisis and the pandemic sell-off, Dividend Aristocrats fell less than the overall market and recovered faster. That's exactly what you need when you're living off your investments. And the best part? The expense ratio is extremely low, often around 0.35% or less. That means more of your money stays in your pocket instead of going to Wall Street. High fees destroy wealth, and in retirement, every dollar matters. ETF #2, Short-Term Bond Fund. Now let's talk about bonds. I know people think bonds are boring, but if you're retired, boring is beautiful. This ETF focuses on short-term, high-quality corporate and government bonds, and the reason short-term matters is simple. When interest rates move, long-term bonds get crushed. Short-term bonds are far more stable and far less volatile. This fund holds investment-grade corporate bonds and U.S. Treasuries, meaning you're lending money to the most creditworthy borrowers on the planet. The risk of default is extremely low. You're not buying this fund to get rich, you're buying it for stability, reliable income, protection when stocks fall. When markets crash, bonds often move in the opposite direction. They act as a shock absorber. While stocks are falling, bonds tend to hold steady or even rise as investors rush to safety. That cushioning effect is critical in retirement. The yield is typically around 3–4%, depending on interest rates, and the expense ratio is tiny, often under 0.1%. That's institutional-level bond exposure at almost no cost, which is why ETFs beat buying individual bonds for most people. ETF #3, Conservative Balanced Fund. Now we come to the ETF that ties everything together, a conservative balanced fund. This fund holds both stocks and bonds in one simple package. Think of it as a one-stop solution for retirees who want diversification without complexity. Most of these funds are structured around 40% stocks and 60% bonds, or sometimes a 50/50 split. The stock portion provides growth and dividends. The bond portion provides stability and income. It's the best of both worlds. What I really love about balanced funds is that they rebalance automatically. When stocks run up, the fund trims stocks and adds bonds. When markets crash, it does the opposite, buying stocks at lower prices using bond holdings. That forces you to buy low and sell high, something most investors fail to do because emotions get in the way. This fund removes human error from the equation. The returns won't be flashy, but they're consistent and predictable, exactly what you want in retirement. Over time, you can expect roughly 5–7% annual returns with far less volatility than an all-stock portfolio. And during market crashes, these funds typically drop 10–15% instead of 30–40%. That difference is massive. It's what allows you to stay calm, stick to your plan, and avoid panic selling. The expense ratios on these balanced funds are also very low, typically under 0.2%, which means your money keeps working for you year after year. You're essentially getting professional asset allocation and automatic rebalancing for almost nothing. Compare that to paying a financial advisor 1% of your portfolio every single year, and it becomes obvious why I like these funds so much. You're saving thousands of dollars in fees while achieving the same or even better results. Now listen carefully, because this part really matters. You don't need to choose just one of these ETFs. In fact, you probably shouldn't. The smartest strategy for most retirees is to use all three together in a way that matches your risk tolerance and income needs. If you rely heavily on current income, you may want to allocate more toward the dividend aristocrat fund and the bond fund. If you can handle a bit more risk in exchange for growth, you can increase your exposure to the balanced fund. The goal is simple: build a portfolio that lets you sleep at night. I've seen too many retirees pushed into aggressive portfolios by advisors promising unrealistic returns. When the market inevitably drops, they panic, sell at the worst possible time, and lock in losses they'll never recover from. That's a tragedy, and it's completely avoidable. Here's a simple example. If you have $1 million saved for retirement, you might allocate $300,000 to the dividend aristocrat fund, $300,000 to the bond fund, and $400,000 to the balanced fund. That gives you income from dividends, stability from bonds, and growth potential from a diversified mix. When one part of your portfolio is struggling, another is likely holding steady or even rising. That's the power of diversification. You're not relying on a single strategy or asset class to carry you through retirement. You've built a fortress around your money. And trust me, storms will come. Market crashes aren't rare, they're inevitable. Over a 20 or 30-year retirement, you'll experience several of them. The real question is whether you'll be prepared or whether you'll become a victim of poor planning. The psychology of retirement investing is where most people fail, not because they chose bad investments, but because they couldn't handle the emotional pressure. When you're retired and withdrawing money, a market crash feels terrifying. This is known as sequence of returns risk, and it's one of the biggest dangers retirees face. Without protection, retirees are often forced to sell assets at depressed prices just to cover living expenses, a death spiral that permanently damages their portfolio. But with the right mix of dividend-paying funds and bonds, you can live off stable income while giving your stock investments time to recover. I've seen this strategy work through multiple market crashes. It's not theory, it's real life. The difference between a successful retirement and a financial disaster often comes down to how well you handle volatility. These funds aren't just about safety, they still provide growth. Dividends increase over time. Balanced funds grow with the market. You're not choosing safety over growth, you're choosing balance. Wealth in retirement isn't built by chasing returns. It's built by staying disciplined, managing risk, and making smart decisions under pressure. That's how wealthy people think, and that's how you need to think too. The purpose of retirement isn't to die with the biggest portfolio, it's to live the life you want without the fear of running out of money. That sounds obvious, yet so many people forget it. They become so focused on growing their investments that they never actually enjoy retirement. They're afraid to spend, constantly worried about what might happen next. That's not living. With the right portfolio in place, with these three exchange-traded funds working together, you gain confidence. You know income is coming in. You know you're protected when markets fall. You know your money is built to last. And that confidence is priceless. It lets you enjoy retirement instead of checking your account balance every day and stressing over market headlines. So here's what you need to do right now. If your money isn't already positioned like this, make a change. That may mean selling individual stocks or stepping away from risky investments. Your retirement is too important to gamble with. Open a brokerage account if you don't already have one and start building this portfolio. You can do it yourself in about 20 minutes. It's simple. You're buying 3 funds, that's it. And once it's set up, you barely have to touch it. Maybe once a year you rebalance if things drift out of alignment. Maybe you reinvest dividends or take them as income depending on your needs. But you're not day trading. You're not glued to the news. You've built a system that generates income and protects your wealth, and then you let it run. This is what smart money does. This is how you survive market crashes. This is how you avoid being forced back to work at 75. And this is how you leave something meaningful behind for your family or a cause you care about. It all starts with the right foundation: safety, diversification, and reliable cash flow. Before we wrap up, do me a favor. If this video helped you, hit the like button. It helps more people see this message, and too many retirees are making mistakes that could cost them everything. And if you haven't subscribed yet, now's the time. This channel is about protecting your wealth and making smart financial decisions. New content drops regularly, and it can genuinely change how you think about money. Drop a comment below. Are you going to use this strategy? Do you already own funds like these? What's your biggest fear about retirement? I read the comments and I want to hear from you. That's how we all get better. I know I can sound tough sometimes. I don't sugarcoat things, and that's intentional. The truth matters more than comfort. Retirement is scary if you're unprepared, but if you have the right strategy, it can be the best chapter of your life. You worked for decades. You saved. You sacrificed. You deserve a retirement without stress or fear. These 3 exchange-traded funds aren't flashy. They won't make you rich overnight, but they will protect you when it matters most. And in retirement, it's not about hitting home runs. It's about staying in the game. With the right portfolio, you can weather whatever the market throws at you and still win. Now take control of your financial future. Build the portfolio, protect your retirement, and live the life you earned.